Brad Thomas here with the Intelligent REIT Investor here at Recon Las Vegas 2014. I'm joined today with Don Wood. Don's a president and CEO of Federal Realty, ticker symbol FRT. One thing I'll tell you about Don is he comes from the same background as I do with the Trump organization. As most of you know, I'm writing a book on Donald Trump, and there's some history there with Don as well with the Trump organization. One thing synonymous with Federal Realty and the Trump organization is high quality. So one thing I want to talk about, Don, is the quality of your portfolio and the history of your portfolio and the performance of your portfolio. So let's start with performance. First quarter, FFO, that's funds from operations, was up 6%. Let's talk about that.
Well, you know, Brad, first of all, there is no substitute for quality. There is no substitute for being in those markets where you've got a lot of people with money to spend, and most importantly, barriers to entry. That's the hallmark of where we are. It's led to, as you know, we've talked about it before, increases in dividends every year since 1967. That's a long time ago, 1967, and we've increased the dividend to shareholders every year since that time. Now, when you look at why, and you look at the quality of the stuff that we do, we are on the coasts, both East and the West Coast. We're a $10 billion company at this point in total market capitalization. And yeah, we just came off a great quarter. We grew FFO at 6%. We also, more importantly, put new leases in place at 18% higher rent than the leases that were there before. And that's in a portfolio that's about 95% leased. So things are cooking.
Sure. Certainly blue chip performance here. Let's talk about the portfolio. You've got around 80 properties. Again, you mentioned you're in some high dense markets. Let's talk specifically about some of the projects that you're investing in today.
Yeah, well, you know, there's a couple of things we do. First of all, it's a very stable company with most of those 80 properties being contributing a stabilized income stream that produces about $470 million, $480 million of cash flow each year from at the property level. That's important because with that base and that fundamental safety net, if you will, we can take some chances. We can take some chances with some great developments like this one, right, just outside of Washington, D.C. in Rockville, Maryland, called Pike and Rose. Right. The same type of project, mixed-use project that we're also doing is up outside of Boston in Somerville called Assembly Row. We're a company that thinks a lot about the future. We think a lot about sustainability. We think a lot about being environmentally conscious and producing places that people want to spend time on. So right now, if you look, we'll over the next 12 months be delivering on about $500 million worth of development. $500 million, it'll be in residential over retail, but the key is those streets will be places where people want to spend time. We're in lease up now. We're 92% leased on the retail portion at Pike and Rose. We're 97% leased up on the first phase at Assembly Row. We're looking at second phases, and we can only do that because of the stability of those 80 properties. Sure. That you talk about.
Sure. Well, another differentiator of your company is the fortress balance sheet that you've maintained over 50 years.
I like that.
You know, you're one of the few companies, I think only 3, that have an A-rated balance sheet. So I commend you for that. But can you talk about that balance sheet and how you're putting that to work for investors?
Surely. And by the way, I'm glad you brought that up. It's an A rating, not just from Standard & Poor's, but it's also from Fitch, and it's also the equivalent from Moody's. So right. All 3 rating agencies kind of recognize that long-term quality and what it is that what we're building. Having said that, we're also extremely conservative, and so of that $10 billion, $8 billion or so is equity. $2 billion plus is debt, so a very low debt to total capital ratio, and gives us the ability to raise money in the public markets, most of the time unsecured, right, at very, very competitive rates to be able to put it to work, right, in development projects like that, and the occasional acquisition like we just did in Shrewsbury, New Jersey, with a really great iconic piece of retail real estate, and that's kind of how we allocate capital.
Sure. Last question, I want to talk about the dividend. I can't ignore that. I mean, this company has paid an increased dividend. I want to emphasize paid and increased dividends for over
1967 minus this year, so where we are, 46, 47 years.
And I know Federal is the longest paying dividend historically, has increased dividends for that period of time. I know that. Dividend champion. So let's talk a little bit about your dividend. How safe is that dividend today?
Well, you know, I kind of just went through the capitalization of the company, the stability of the major portfolio that we have. That record is gold to us. We certainly run the company as though it were gold, and can certainly expect to be able to continue to increase that dividend, and we would expect to do that this year also.
Great. Well, you can't trump that.
You can't trump that. Well done.
Thank you so much. This is Brad Thomas from the Intelligent REIT Investor.